Nobody's afraid anymore. The VIX just collapsed to 15.99, its lowest in weeks, and that calm is the setup that snaps first. Watch it going into August. I'm Max Sterling. This is your StockStory market ritual, for minutes, the numbers, and what they're hiding. Here's the stakes question: if fear has genuinely drained out of this market, why is the money crowding into exactly the riskiest corner of it? Consumer discretionary ripped plus 3.29% today, Amazon surged plus 15.32%, and the crowd is treating a two-day rally like the all-clear. But the rotation we've watched all week keeps flipping, and complacency at 15.99 on the VIX isn't safety, it's the price you pay right before volatility reminds everyone it exists. Who's wrong here, the buyers, or the calm? Now the receipts. The S&P closed 7,489.72, up 0.7%. The Nasdaq led again, plus 1% to 25,373.85. The Dow added 0.53% to 52,485.03. Green across the board, but thin underneath. Consumer discretionary plus 3.29%, communication plus 1.56%, energy plus 1% carried it, while healthcare bled minus 0.59%, utilities minus 0.69%, and materials cratered minus 2.34%. That's not broad conviction, that's money sprinting to one side of the boat. Amazon was the story, plus 15.32% to $271.58 and the most active name on the tape. But Apple fell minus 7.35% to $308.91 on the same day, the two biggest weights pulling opposite directions. The wreckage was real too, Roblox down minus 26.85%, Reddit minus 20.99%, Verisite minus 22.52%. IES Holdings ripped plus 30.27%. This was a violent, split market wearing a calm face. And the scoreboard doesn't lie. Yesterday I called the VIX to bounce back above 17.50 as the one-day fear collapse cooled off. It didn't cool, it kept falling, closing at 15.99. That's a clean miss, and I'm logging it. That drops me to 15 to 16. I'm officially underwater on my own record, and I'm not going to dress it up. I've been fighting this tape's complacency for a week and the tape keeps winning. 15 wins, 16 losses. Keeping score means owning the red. Here's my read. The sector rotation saga we've tracked 6 days running just tipped its hand. Defensives got sold hard again while discretionary led, which is the third whipsaw in a week. That's not a trend, that's a market that can't decide, and indecision at a 15.99 VIX is the most dangerous combination there is. My honest take, this rally is narrow, it's Amazon-shaped, and Apple falling minus 7.35% underneath it tells you the generals aren't marching together. I'm not shorting strength, that's how you go 15 to 17. But I'm watching materials at minus 2.34% as the tell. When the cyclical stuff that should lead a real recovery is the worst sector on the board, the recovery is suspect. So here's tomorrow's call, and I'm planting it clearly, that VIX at 15.99 is too low to hold. I think it closes back above 17 as this complacency cracks, first day of August, thin conviction, split leadership. Logging it now. Come back and grade me, because I'm the one keeping score on myself. Same time tomorrow. Subscribe so the ritual finds you.